Hello, in this lecture we'll take a look at Chapter 24, Performance Measurement and Responsibility Accounting. We're going to start off with decentralization and common ways we can decentralize. So as a company gets larger, there could be more and more incentive or pressure or opportunities to decentralize. And the decentralized meaning that we're going to give more authority to central departments of an organization. When an organization is small, it's quite possible for a small group of people or even one individual to manage many of the large decisions and even many of the more daily or more common decisions throughout the business process, throughout the entire company. But as a company grows, there becomes more and more benefit possibly to some form of decentralization, meaning we give more of the decision-making power to other individuals, lower level management within the company. Two ways we can decentralize. We can decentralize by geography. So obviously if there's different locations within the company, we can decentralize based on those different locations. We can also decentralize by product line, which could be advantageous if we have specialties and specialists within certain types of product lines. Advantages of decentralization. So there's advantages and disadvantages, of course, to decentralization. Generally, as a company grows, oftentimes decentralization becomes more of a benefit at that time. So timely access to information. So if we're decentralized, the decision maker who has more control over the decisions being closer to the actual data where that decision is being generated is often an advantage, as opposed to having them gather the information, give it to the central managers where they would then make the call. They're a few steps removed from the area where the actual data is. Enable top-level managers to focus on long-term strategy. As a company grows, the top-level management is often geared towards long-term strategy and the big picture. That's where the top-level management should be spending most of their time in a larger company. And therefore, the middle management and lower-level management is usually geared more and more towards the day-to-day activities, and that relieves the pressure on the top-level management to focus on that long-term goal. Good training for employees. Oftentimes, it's a good idea to have people that are going into top-level management that have been trained within the company rather than hiring outside. And that could be done through giving more power and more authority to lower-level managements throughout the process so that they can be trained for upper-level managements if that opportunity and when that opportunity arrives. Boost employees' morale and retention. Morale and retention are often boosted when people feel engaged in the process. So the more we can engage lower level management, have them be part of the process, have them have more authority within the decision making, and that will give them more incentive to do well because they will feel more valued in the process. So it often increases morale. Disadvantages. There are some disadvantages to decentralization. One is the managers are too focused on their own department. So oftentimes if we say that this individual, you are in charge of this particular department, that department becomes everything to them. So, and that could hurt the overall goal. So remember, as a top-level management, we're often looking at the big picture, the long-term goal, and the lower-level managements are oftentimes looking very closely at one particular area, and they may be making decisions, therefore, that are actually hurting the overall picture. So decisions of individual departments might conflict with others. It's quite possible, once again, because an individual is not focused so much at the big picture, they're focused on their own particular department, that they make decisions that could hurt other departments. And sometimes, depending on how the incentives are set up, they may actually be incentivized to do that, because some companies might actually try to have some competition between departments, and in so doing, departments may have some incentive actually not to cooperate as well. So we need to be very careful with our incentive plans and make sure that we have the big overall vision in place and see if we can not have people get too focused on their individual departments. Department might duplicate certain activities. So this might need to happen, and it might be something that doesn't need to happen, but it does because of lack of communication. So if two departments are not under the one individual and they do not communicate, maybe they will not share as much information. Maybe we'll have duplicated processes happening within the two departments. Also, if they're decentralized, maybe the two departments are going to need two separate things that could have been pulled together into one process if they had not been centralized. So performance evaluation. One of the benefits of decentralization is that we can then evaluate based on their departments. And in order to evaluate based on their departments, we're going to have to first figure out what type of department they are, and then we want to evaluate them in a way that's appropriate to that type of department. So one way we can do that is we can break out the departments between centers, such as a cost center, a profit center, and an investment center, and see what it is that they do, and then come up with effective or fair measurements for those different departments. For example, cost center, evaluate on the ability to control costs. They don't generate revenue in a cost center, therefore the revenue goal isn't really what we're going to measure the cost center's performance on, as opposed to a revenue center, which has evaluate the ability to generate revenue and costs and expenses. So if the revenue center, clearly it could be like the sales department, obviously we will measure them pretty much on revenue and see how much revenue they are generating. And then the investment center, evaluate on the ability to generate return on investment. So an investment center, we're looking at investment and we're evaluating how good they did in getting the return on that investment. Controllable versus uncontrollable costs. So then when we're measuring different segments, we're going to apply costs to those segments, and we're going to have them be part of the budgeting process, and we're going to have a budget for them and whatnot. When we look at the budget, we're going to consider the fact that there's some costs that the manager of that department is controlled and has more control over, and those are the ones that we want to make sure to hold that manager accountable for, as opposed to things that are not controllable. If we apply a cost out that the manager has no control over, and that is a factor that's significant, then we can't really hold the manager accountable for that. They have no control over it. So a cost is controllable if the manager has the power to determine or at least significantly affect the amount incurred, such as supplies used in the manager's department. So obviously the department can't have no supplies used, but it's very possible that a manager could go over in terms of use of supplies. Therefore, the manager does have authority and can influence the supplies being used, as opposed to an uncontrollable costs are not within the manager's control or influence. So the department manager's own salary, for example. And you might be saying, well, the manager has control over their own salary, that he or she could accept less money. But the idea being that the salary is fixed. Therefore, even though we're going to allocate it to the department as part of their bottom line, when we make decisions in terms of how their performance was, we can't really take a fixed cost and judge their performance based on that. Another might be the rent or something on the building. Can't really judge someone on the rent of the building because they have no control over the rent. That's nothing that they can negotiate on.